We're going to give you our complete Facebook stock analysis of the Q2 earnings call last week, and if it's any indicator for you to start actually buying the stock. Welcome to the Money Growth Academy. My name is Dee, and this is where you'll learn to master your wealth, to free yourself. We'll give you the practical and the tactical knowledge and skills to improve your EKG. That's your ability to earn, keep, and grow your money. Here's a look at the last Wednesday's headlines leading into Facebook's Q2 earnings call. One said Facebook stock opens lower after finds antitrust inquiry. Facebook agrees to a $100 million SEC fine over misuse of user data. And Facebook stock is dropping after it agreed to pay $5 billion penalty over privacy issues. So to know where we're going, it's always good to stop and take a look first at where we've been. So I'll be comparing Q1 and Q2 in this recap. I'll cover the bad, I'll cover the good, and what you might anticipate from the stock's performance in the future. So before you decide to click off this video to watch a Kardashian or Fail Army video, I encourage you to keep watching, because what you'll find is more real and more in-depth analysis of Facebook designed to appeal to both beginner and the seasoned investor. And before I get started, a little disclosure: I actually own shares of Facebook stock within my portfolio. The other item to note is that this video is for education and entertainment purposes only. The information we share should not be taken as financial advice. Please do your own research, and if needed, consult your financial advisor. I don't know your personal financial situation. So let's get started with the bad news. The bad news is, well, it's operating margin, which you can see in this chart, right? So it demonstrates how efficiently the company is in converting revenue into profit. And as you can see here, it was down 22% from 46% in Q4 of 2018. But you know what? If you omitted the one-time accrual, Facebook really achieved 42% operating margin in Q1 2019. Q2 shows 27% operating margin, which reflects the $2 billion accrual taken in Q2. You can also see the impact of the one-time expense again in the chart of net income here. The Cambridge Analytica fiasco is still dangling over Facebook's head. That's where it was alleged that Facebook was sharing their user data with Cambridge Analytica. It demonstrated Facebook's sloppiness in safeguarding user privacy. I counted this as a Facebook stumble and a potential market opportunity to buy. As a result, Facebook knew it could potentially be facing a possible future FTC fine of $3 to $5 billion. And so it started actually accruing in Q1 2019 for this inevitability. There are also worries of market saturation for Facebook. It's growing much slower now. Saturation obviously is inevitable at some point in time without innovation or acquisition to add value to the platform. But what excites me is Facebook's potential ways it can tap into that existing 2.38 billion active user base. It's like owning 2.38 billion Coke vending machines, and to make another $1 billion, all they have to do is add one more drink to the machine. And another thing to think about is total expenses in Q1 of $11.8 billion and Q2 of $12.2 billion, both of which includes a settlement accrual and the hiring of content moderators and new security controls to make the platform safer for users, which was forecasted by Facebook in Q4. These increases, and expenses, they can be seen in the capital investment charts here. So let's talk about something good. Facebook Q1 and Q2 2019 revenues results, well, they beat analysis expectations. And as seen in this revenue chart, Q1 revenue expectations were $14.97 billion, and Facebook exceeded those expectations, coming in at $15.8 billion. In Q2, Facebook exceeded revenue expectations of $16.6 billion, coming in at $16.9 billion. So as you can see, they beat estimates and earned more than in the same time last year. And that's with Facebook facing the $5 billion settlement that they're up against with the FTC. Revenue was up 26% year over year, which was $12 billion in Q1 2018, and nearly 27% at $17 billion compared to just over $13 billion over the same period last year. Now, this is good news for investors because it means advertisers are still bullish on the Facebook platform for advertisement. Other good news is earnings per share, or EPS. Even though it had a slight miss at 85 cents on an expected $1.62 last Q1, Not a big deal when you figure that it didn't take into account the $3 billion in cash set aside for the expected settlement. In Q2, Facebook beat earnings per share by beating $1.88 per share forecast to come in at $1.99 per share if you take into account the impact of accruing for another $2 billion towards that $5 billion FTC fine, and also another $1 billion for potential tax liabilities that resulted from a current dispute about how Facebook accounted for stock-based compensation. Also, good news, daily active users, 1.56 billion active users, which was in line with expectations. It was up 8% from last year. In Q2, a slight uptick at 1.58 billion active users, which matched forecasts. Asia, although only making up 1/5 of Facebook's actual revenue, appears to continue to grow. As you can see here, monthly active users came in at about 2.38 billion. And on an expected 2.37 billion in Q1, and in Q2, Facebook met their forecasted monthly active users at 2.41 billion. And as you can see, growth, well, it's slow in the US and Canada as well as in Europe. So what can you expect, or at least anticipate, for Facebook's future? Well, I don't have a crystal ball here, but we'll take a good look at it. The digital ad market is expected to have a compounded annual growth rate of 13% from 2018 to 2023. The biggest players are Google and Facebook, and you got to include Amazon in there. And they all offer something slightly different enough for advertising platforms and user experience that make them all extremely valuable to advertisers. We can expect Facebook to further leverage Instagram and video ads within that platform. There is a possible new sales system to allow users to buy products on Instagram, so that's a possibility for more revenue. There's a WhatsApp potential payment system in the work, so we'll have to see how that fleshes out. So in summary, after reviewing Q1 and Q2, things are better than expected, and there's the possibility of recovery for Facebook. But here are some of the concerns that I have. Well, there's talk about a potential breakup of Facebook by Congress, and the way Congress sees it, Facebook has too much power, and it's great a concern for, it says, the citizens' privacy. With the upcoming 2020 presidential election coming up, well, I think we'll hear more politicians getting on the breakup Facebook bandwagon, not for the benefit of us as consumers, but for reasons of political posturing. You know, Facebook is learning, the public is learning, and governments are learning to negotiate privacy and the distribution of disinformation, the latter which used to be solely controlled by governments, newspapers, and newsrooms around the world. The reality is Facebook is a place that without critical thinking, one can come to confirm unsubstantiated beliefs or to challenge them. There has to be some personal accountability on the user's part as well. No algorithm will take the place of human critical thinking. So we got to think. So how does Facebook prevent what happened in Myanmar and leading up to the US presidential elections in 2016? Well, I'm not sure they can actually do that 100%. Think about it. This is a dynamic platform with billions of people and governments using it for good and bad. This is nothing new. Old and current news media, Hollywood, advertisers, governments have been spreading bias and fake news narratives long before Facebook was invented. So this is a game that's been played for eons. The only difference today is that Facebook's technology, well, it's centralized this power within one single entity, not controlled by any government. And it made it so that the whole world can experience all these events in nearly real time. Another concern is that, you got Facebook, and they're reporting active users daily and monthly. Well, there's no independent source verifying the user count. So as an investor like me, do we really know if it's actually still growing or not? It's the ultimate communication tool, Facebook is, with wide and fast distribution capabilities. I've even heard some people say that younger people have begun to abandon the platform in favor of things like Snapchat or Instagram. Well, Facebook actually owns Instagram, so that's not a bad deal. And but I tell you what, I have a relative amount of confidence that Facebook may be smart enough to adapt and find ways to broaden its audience through acquisitions or in-house development. I like the fact that many small businesses and business owners are really waking up to the fact that Facebook is a very cost-effective means to reaching more of the right customers at a lower cost. And so I got to think that, Facebook may be around for a while. Now, I believe Instagram has still not flexed its muscle yet. So we can expect revenue impact to be revealed over the next 2 to 3 years as it begins to flex its muscle. So will Facebook continue to grow? Well, I think it's highly probable as long as companies need to sell stuff, right? So someone has to advertise it, and Facebook is a great platform to do just that. The question you should be asking yourself is, if you didn't buy Facebook stock between July 23rd, 2018 and December 17th, 2018, when the price of the stock fell 40.48%, why not? In an upcoming video, we'll cover 3 key reasons why most people do not take advantage of stock buying opportunities like these during big downturns and stock value. Think about it. The stock price had fallen off sharply, well, just over 16%, right? 16.69%. A nice discount at that time. Then by September 4, 2018, it had dropped off 22.34%. And if you had not purchased your full position back on July 23rd, 2018, and you had some money left, you would have had the opportunity to go back and to buy. I know, hindsight's always 20/20. Well, this is called averaging down. This is where you buy more shares as the stock price starts to decline. Averaging down makes sense here, but not always. Well, why? Why does it make sense here? Because when you have a company that is worth billions of dollars, cash rich, growing revenues, no debt or very little, although it is facing some immediate challenges, it's still positioned for future growth. I'm not a buy low and sell high guy. I like to buy valuable, profitable companies at a recognizable discount when the market puts them on sale. I then hold these stocks until either I lost confidence in the company or I found a better opportunity for capital growth. Facebook is an important communication utility for businesses, for governments, and for communities. And although it has its problems, right, it's now an integral part of world communications. You know what? Another thing to think about is it possible that, well, Facebook may be too big to fail? It is now a major corporate player in terms of revenue creation for the US. Here's something else to think about. Is Facebook stock a buy for me right now? There's a chance we may not see another retreat back to the $150 per share price range in the too near future for Facebook. So, I don't know, you might want to consider that in your decision on whether to buy now or not. Though the stock still has some potential upside in the future, I like the margin of safety offered between December 17th in 2018 and January 14th in 2019, when the stock was priced between $125 and $159 per share. So for me, right now, I'm not buying more Facebook stock. I like my current position and the value I've received as the stock has actually run up. So to me today, Facebook at $200 per share does not provide enough margin of safety for my level of comfort. And as you remember, margin of safety is that price that I'm willing to buy the stock because it presents more protection from the downside risk. So for me, I'm holding my current shares, and I'm not adding any new Facebook shares at this time. Well, what can we expect also? Well, we can expect Facebook shares to experience some volatility in the coming weeks caused by the media drama created around it, and more for the purpose of increasing viewership of these financial news channels than anything. You may want to keep your eye out for some possible buying opportunities as it has its volatility run. We'll have to wait and see what happens. If you like this video, hit the thumbs up button. And please subscribe and hit the notification button to be notified of our upcoming videos designed to help you earn more, keep more, and grow more of what you keep. We'll see you next time.